Hello traders. Welcome to this week's Forex Profit of the Week update. We are going to discuss about Canadian dollar and US dollar pair. Why the pair US dollar to Canadian dollar is one of the interesting pair to watch for this week. The Canadian dollar saw a boost this week, largely thanks to a surge in oil prices. The loonie gained strength as tensions escalated in the Middle East, pushing oil prices higher. With oil being a significant export for Canada, this rally provided some much-needed support for the currency. However, whether this strength can be sustained depends on the stability of oil prices in the coming days. Meanwhile, across the border, the US dollar found fresh support from positive economic data. US consumer confidence soared, reflecting increased optimism among American consumers. In addition, the economy expanded at a faster-than-expected rate, cementing a strong dollar performance. The steady core PCE price index at 0.2% further signaled a stable inflation environment, providing a solid foundation for the greenback. In contrast, Canada's economic landscape presented a different story. The latest data revealed no expansion in Canada's economy, falling short of the expected 0.1% growth. This stagnation led to a weakening of the Canadian dollar, dampening the optimism that had built up earlier due to rising oil prices. The Canadian economy's flat performance has left many investors wary of the loonie's future prospects. Looking ahead, the weekly forecast for the US dollar to Canadian dollar pair leans bullish, driven by the economic divergence between Canada and the US. With the US showing stronger growth and consumer confidence, while Canada's economy struggles, the US dollar appears to have the upper hand. Additionally, any correction in oil prices could put further pressure on the Canadian dollar, maintaining a bullish outlook for the US dollar to Canadian dollar pair. Next week brings several key events that could shape the future of the US dollar to Canadian dollar pair. The US will release its manufacturing PMI and employment data, while Canada will present its employment report. The Bank of Canada is also set to meet on Wednesday, with investors anticipating a possible rate cut. These events will be crucial in determining the policy paths of both the Federal Reserve and the Bank of Canada, as central banks increasingly focus on growth amid moderating inflation trends. Now, what the technical chart shown us. Let's go to the chart now. We have opened the daily chart of US dollar to Canadian dollar and analyzed that the pair has been trending lower over the past few weeks, influenced by a weaker US dollar and strong oil prices, which boost the Canadian dollar. Currently, the price is trading below the 20-period moving average, and the stochastic indicator is moving higher, trying to exit the oversold area, suggesting a potential for a slight upward move. Key support levels are at 1.3436 and 1.3364, while resistance levels are at 1.3532 and 1.3602. If the price continues to rise and reaches the resistance level, it could move even higher to the next resistance level. However, if US dollar to Canadian dollar fails to break above the resistance, the price may retreat and test the support levels. Remember to always be aware of your risk management before entering any positions. Okay, that's all for today's analysis. See you in the next video.